Good evening, everyone, and welcome to tonight's, or today's, wherever you are, whatever time it is. Welcome to our Ball Charts User Group webinar for all Ball Charts users and even the tie kickers. That's not a derogatory term. That's welcoming those who might be simply looking at the product. There might be some. Tonight, we do have a presentation that one of our users will deliver. We'll have a look at that shortly. And don't forget our disclaimer. Nothing you see tonight is advice of any sort. If you do happen to take some on board and try it and make some money, by all means come back and tell us and share some of the proceeds. We'd love to have some. Everyone, what we've got tonight is a couple of months ago, Paul Kilmeister offered to talk to us about Ichimoku. It's something he's got some experience in. I've had a look at Paul's slides. We had a chat about them over the last couple of days. I think they look really good. And I know this is a tough topic, but Paul's doing the best he can to make it comprehensible. So I'm sure you'll all stay awake for this. Paul, it looks like you're ready. So welcome. And everyone, please make Paul one of our regular user group members in the webinar. Please make Paul welcome.
Thanks, guys. Okay, so Ichimoku Cloud, I don't know how many people have had a look at it or have had a look at it and then looked away from it, but we'll try and work our way through it to make it more interesting and maybe a tool that you can use in the future. So just a disclaimer. I don't know how old you think I sound, but I've actually been trading for about 40 years, since I was 18, and I could open a broker trading account. My family traded, my dad traded shares, and that's how I got involved in them. I had a broker up until I got involved with computers, and I think, I can't even remember whether it was trade analyst or market analyst was my first program, and then I moved to Metastock, but every time Metastock brought out a better version, they charged you another fee for the whole program. And after about 3 goes, someone mentioned bull charts, and I can't even remember. It's got to be maybe even before 2008. I just realised it's been around for 17 years, so I might have even been involved with it before 2008. But I've survived the financial crisis, the COVID crash, and everything else. So anyone that's been still trading at 40 years must know something, because most people go bust before then. Anyway, I trade as an investor in my self-managed super fund, and I swing trade shares, CFDs, options, mainly in the Aussie market, but I also have a few US stocks as well. Just on that, I have retired and I'm back working again. I'm a clinical pharmacist for the Veteran Affairs Department, and I do work 5 days a week, 9 to 5. So most of my trading is swing trading these days, and I don't know how many hours I've tried to educate myself. I've got books, seminars, and I've mentioned a few here because these are the ones that have really stuck out for me: Stan Weinstein's Secrets, Mark Menavee, Daryl Guppy. And you notice that all of them are really about trend trading, because that's when you tend to make your money in a trend rather than in a stagnant market, and hence the investing versus swing trading. I've experimented with a few indicators, and I tend to go back to my favourites, and 2 I particularly like and find useful. One is the Ichimoku Cloud, and the other one is the Heikin-Ashi candles, and you'll see later that I actually combine the 2 in some of my processes. And just reiterating on Robert's earlier disclaimer, this information is just educational. I'm not recommending this in any shape or form, but just be aware that it might be handy in the future for looking at things. So that, believe it or not, is an Ichimoku chart of the All Ordinaries. And I picked that one because it looks so higgledy-piggledy. It's actually a collection of technical indicators. There's 5 of them in there, and it shows support, resistance, momentum, trend direction, And the moving averages are plotted on there to get the picture that we can see here. And the cloud, or the Kumo in Japanese, was developed by a Japanese journalist, Mr. Hosoda, back in the 60s, as a way of providing more data than a standard candlestick chart. And looking at that, I think he's achieved his goal, because there's certainly a lot more data there than a normal picture or a chart. Okay, so just, and Robert and I talked about this, it might be a good idea if you do a screenshot or print this screen out, because this gives you an example of the 5 major components of the cloud. So this slide and the next one that gives you the formulas for it might be worth printing it out, and so you can reference it later on. But it shows the 5 components. The first one being the cloud. The green cloud is an uptrend. The red cloud obviously a downtrend. We've got a span A, which is a shorter moving average. We've got span B, which is a longer moving average. And we've got 2 crossover lines. And this purple line, which is called a delayed. Now, if you look at YouTube or any of the channels on the internet, you'll find that a lot of them get rid of the delayed. They think it just makes the chart messier, and they don't use it in their calculations. But I'll show you later that it's actually pretty useful and worth keeping an eye on. But just on the moving averages in the cloud, they're not your standard moving average. So this first one, the standard, it's a 26 period average, but it's not a moving average of the close. It's a moving average of the high and the low. And the same with the shorter moving average. It's a 9 period of the high and the low. So a little bit different to your standard average. And the delayed, well, that's just the closing price 26 periods ago. If it was a day chart, 26 days ago. If it's a weekly, 26 weeks ago. So if you've got a chance, take a screenshot of this one and also this one, because this is the formulas for the cloud and how it's worked out. As I said, the conversion line, which is this standard here, that is your 9 period high and low, the baseline. And from now on, I'll talk about the terminology in bull charts, because it is a little bit different to some of the other programs out there and some of the things on the web. We call it the turning and standard line. They call it the conversion and the baseline. It's also called the lagging span, in our case, the delayed line. And you don't have to remember the Japanese names for it. Some people go into detail. It's just superfluous. You don't need to know the timing of it. All you need to know that the cloud combines multiple time frames, and the cloud itself is defined by the leading span A and the leading span B, which is these moving averages. Okay, and you can see where they cross over, the cloud changes color. And being the longer of the 2 averages, the span B becomes the more important one. The second component of the cloud is the crossovers, and we just talked about those being a 9 period and a 26 period, but of the high and the low price, not the closing price. Just like moving averages, they can be used as a enter and exit signal. And again, you can turn them on and off by the layer manager. And if I just bring up, this is a template of the Ichimoku cloud, as you'll see it. And down here on your right-hand side, might be on left on yours, you've got your security manager. And just across the bottom here, we've got the layer manager. And that chart that I just showed you, all I've done is I've turned off a few of the features. And if we turn off that was the cloud that I showed you before. And the one that we're looking at now was just I'll just turn off the chart itself, and we'll show the crossovers, which is the chart that I just had up here, showing that we've got a crossover on the upside here, which tends to indicate a bit of momentum shift to the upside, or a crossover here to the downside. So it can be used, you can use the cloud, you can use the crossovers as well as a trading system in itself. The delayed, as I said, a lot of programs don't use it. It's a closing price 26 periods in the past, and this is a daily chart. So in this case, what happened was at about January 6 here, out here, the price closed above the cloud, and you'll see that the delayed at the same time crossed above this cloud here. So it's another tool that can be used. And in bull charts, again, just to show you that if you want to produce a 26 period in the past, there's a tool here called the time ruler on the left hand side, and it's pretty easy to, if we put some time on, if I wanted 26 periods from here, I can use the time ruler and just pull it back to 26 bars. And that is exactly how I got this. Just to show you that here we've got the price breaking the cloud, and at the same time the delayed is breaking this cloud. It's same here. We've got the delayed coming into the price area, and if you look up this chart, when you see the price way away from the chart, that's another method. That means that there is really strong momentum. You can see that the cloud itself is climbing, the price is a long way from it. It means that there's very strong momentum. And you'll see that as the price approaches the cloud, the momentum decreases and the delay comes closer to the price area. Just before we summarize it, just to show you a few entry and exits. One was here, and an exit could be when the delayed actually came in here, or when it broke the chart or broke the span B. And obviously a swing trader or an aggressive trader would exit here, a swing trader probably here, and the investor, obviously when it breaks down here, it's a time to get out. So that makes much sense. Here's the summary. So we can use it to determine the direction of the trend. Is the price above or below the cloud? That determines whether it's an uptrend or a downtrend. We can determine support and resistance. And when I mean dynamic or fixed, dynamic is, see how the price crawls up the side of the cloud here? That cloud is acting as a support base for that price. And because it's so close to the cloud, it means that the momentum isn't that strong. It's fairly weak. But you can see here, it's so far from the cloud, so far from the support, the momentum is much stronger. The same here, we have the price bouncing off upper resistance here, lower support here, upper resistance, and then falling below here. So all of those momentum, dynamic resistance, they're all shown clearly on the Ichimoku cloud with one look, and that's what it translates to. Ichimoku is one look or glance to show whether a price chart is in an uptrend, whether it's got support and resistance, and how strong its momentum is. So there's three things just by one look at the chart. We can use entry and exit multiple times by using the cloud itself, the crossover that we showed, or even just using the delayed line and its relevance. And it can be used on shares, Forex, commodities, Bitcoin, ETFs, in any time frame, any trading commodity. Short, swing, long term, multiple time frames, and we'll show you some of that later. It can be used in a standalone system, or it can be used in combination with other complementary indicators, i.e. volume, money flow, just for confirmation. So you can use it as a full system, or you can just overlay it on your chart when you've, say your system has created something that you might think is a good deal, overlay it with this and see if it gives you confirmation of what you think is going to happen. Okay, so here's your standard candlestick chart of the ASX. Just looking at that, can you tell whether it's in an uptrend, downtrend, or consolidation? Maybe, depending on your time frame and the context of this chart. But what about that? Okay, this clearly shows we've got price above the cloud, uptrend, price below the cloud, downtrend. We've got a strong downtrend because it's a long way from the cloud. And as the cloud flattens out, span B gets very horizontal. So as the cloud, the price starts to come into the cloud and it flattens out, that's a sign that we're in consolidation and there's not really that much happening. And you'll see that, again, the dynamic momentum, dynamic resistance support, it bounces off the cloud, weak support, drops, bounces off the major resistance there, span B, bounces around in the cloud and drops below again. So a golden rule, if this is a daily chart, the golden rule is never trade when the price is in the cloud, because there's volatility, you don't know what's going to happen, and it's what we call no man's land. Don't trade if you're trading daily on a daily cloud in the cloud. It's a no-no. Much better off trading here when it's broken support and you can see that there's strong momentum in your favour. Okay, here's your normal chart again. If we put a 200 EMA on there, now it looks like it's in a downtrend. Makes it pretty obvious. Here's the same 200 EMA on the cloud. Does it make it any more obvious? Do we really need the 200 EMA? I think it's pretty obvious. It's been in a downtrend. We can see that the momentum weakens as it flattens out, and as it gets more horizontal, the price gets closer to the cloud, which is a sign of reaching support. Everything seems to bounce back to the average, a la Bollinger Bands, etc. They work on the same principle. Okay, here's your normal chart again, and this one I plotted support and resistance lines, and it makes it pretty messy. And if you want to add your moving averages to it to see if it's in an uptrend or a downtrend, there's a 50 period, a 200 period, and this one, not many people talk about it, but for a lot of big shares, it's actually a bit more accurate. It's actually a 10-month simple moving average of the price. So you'll see that in a lot of cases, it's actually more of a support and resistance than what the 200 is. And you'll see that a lot of cases, it bounces between the two, a consolidation area. So don't forget that 10-month simple moving average on a chart. And if you want to know how to put a 10-month on a chart, it's just a matter of putting an indicator on 10. And we'll colour it so it stands out. Now, you see that that isn't what it looked like. What I'll do here, this is a trick to move it to a different time zone. And under the Advanced tab of your properties, we've got the option to convert the period to a different level, weekly or monthly. This is monthly. And that's how you can put a different time frame onto a normal bull chart. Okay, so yeah, once we put the moving averages on, it gets very messy. Here's the same chart, and again, messy on the Ichimoku. What I wanted to show is these support and resistance lines were done on a normal chart, and I've just overlaid the Ichimoku on here to show that they correspond to these big flat spots on the cloud. The big flat spots on the cloud correspond to major areas of support and resistance. And even the littler flat spots, span A is the shorter moving average, so corresponding to that, we still have areas of support and resistance. So it looks messy on here, but I just wanted to show that these areas do actually correspond to a normal support and resistance chart. And for those wondering why Ichimoku is 92652, the reason is the Japanese back in the 30s to, I think, mid-70s traded 6 days a week on their stock exchange. So 9 days was 1.5 weeks, 26 days was 1 month, and 52 days was 2 months, which is why the 52 day, the 26 day, and the 9 day on a Ichimoku cloud. Again, here's a chart of BHP with lines of support and resistance overlaid. It looks more cluttered, but again, it was to purely highlight the flat spots on the Ichimoku cloud and how they correspond to major support and resistance on another chart, just to show I wasn't picking a chart that would look really nice on. You can bring up multiple charts and it'll be the same. And on bull charts, instead of putting all these lines, an easy way of looking at it, I'll bring up a bull charts and we put on the charts again. If we put the cloud back and just use the crossbar, you'll see that here's a flat spot and then we've got support and resistance. Here's a flat spot, they bounced off it. Another flat spot, another flat spot, and see how they correspond to areas to the left of support and resistance. So just showing you can get rid of all the support and resistance and just use your crosshairs and you've got the same thing as that higgledy-piggledy thing that we've got here. There it is there. So you could just use your crosshairs on this and get the same areas of support and resistance. This one here I've actually changed to Heikin-Ashi candles because it stands out even more. So we've got bouncing off support and resistance, flat spot on the cloud. We've got it breaking the flat spot. We've got it breaking the support. We've got bouncing off, failing to break and coming off again. And I just put the 50 and the 200 EMA to show that, as I said, which one's giving you a better picture. A lot of people use the 200 and the 50, but if I didn't have the cloud here, this break here of the 50 moving average, it flattens out and goes above it. A lot of people will be tempted to get in here, but if you'd overlaid the Ichimoku cloud, you would see that we've got a major area of resistance here, and you really want to break that to confirm that it's in a new uptrend. And in this case, it couldn't break that, and it actually continued down. So for those people that trade breaking the 50 moving average, you would be hopefully stopped out here before you lost too much. So whether you use a moving average crossover or something else, you could just use an overlay of the cloud, and if you were to buy here with a breakout, you might put your stop just around about here somewhere. So if it didn't reach it, you could take some money off the table and you wouldn't be able to pocket so much. So whether you use the cloud to trade or whether you just use it for confirmation, in this case, it would have saved you quite a bit of money. Okay, so just again reiterating, momentum strength, further from the cloud, more momentum is in there. And you'll notice that as the momentum increases, the cloud heads in the same direction. So we've got a teardrop cloud, we've got strong momentum, the cloud showing strong momentum, price is way away. As the momentum weakens, there's some consolidation here. It weakens, it comes into the cloud, it uses the weaker edge of the cloud for support. It doesn't break the stronger resistance level. And again, dynamic support, it bounces off the cloud, breaks. In the cloud again, we've got a consolidation area. And again, shown here with Ichimoku again, because it provides better pictures of the trend without the noise. And you can see here, if you had a break of this and you wanted to trade it with your other system, you would see that there's major resistance at this big, thick cloud. Maybe a time to take a profit here or take some money off the table if you were using another system. So without moving averages, this really quickly shows that it's in a downtrend. It shows where support and resistance are and the flat lines of the cloud. I've just put some support and resistance lines in to demonstrate how much of a consolidation area this is when the cloud flattens out. Just shows it quite clearly. Getting on to, and these blue lines again, I've taken from a normal chart. They're the major weekly support and resistance areas for Cochlear. I've just dashed them because it does make the cloud look a little bit messy, but just wanted to show you that here we've got the price breaking above the cloud in November, the 24th. Okay, it breaks above the cloud, drops back to major support. We climb up the cloud with a little bit of weak momentum. We drop back in and retest it. And you'll notice major area of support. We bounce back to here, and now we've got more momentum, more strength. We come up here. Again, we start to get some consolidation. We get weakening, moving towards the cloud. And as you see here, we bounce off the cloud several times. We dip into the cloud, we retest the cloud, we break the cloud. So there's multiple chances for entry and exits just by using the cloud without even having to consider the crossovers as well. Again, strong downtrend, uptrend, price above the cloud, price below the cloud. This is Bitcoin, just to show you that it can be used on other entities. You can see Bitcoin had a particularly severe downtrend. We had some consolidation, a little bit more consolidation, bit of an uptrend. Notice how the weekly corresponded to the bottom, which is the strongest span support for the cloud. We bounced above again. The momentum weakened, got closer to the cloud. Same story. So that's an expanded view of Bitcoin to show you that it can be used to trade that as well. This one is Fisher and Paykel, again with Heiken and Ashi, just to give clarity of the trend, the nice red and green arrows. And I just want to show the confluence of signals here. So we've got a break of the cloud here. We've got on-balance volume breaking its average. So the on-balance volume is increasing. The price is increasing. We've bounced off the cloud. The weekly MACD is increasing. So we've got all signals saying that it's going to be a reasonable trend, which it is. And we bounce off the cloud with some support here. You'll notice that an on-balance volume usually precedes price. So we see that the on-balance volume is weakening as the price gets closer to the cloud. And interesting here that on-balance volume's down, the MACD is crossed below. That's a 34 EMA ribbon. So all of these things happen saying get out, get out, get out. 1, 2, 3, 4, 5 indicators. It's a pretty good sign that's a time to get out. So what I would just trying to iterate is, do you need all these signals, or can you just trade it from the cloud? Same one with normal candles. I'll just go back. That's with Heikin-Ashi candles. See how obvious the trend is? And this one is with normal candles. A bit messy. It doesn't look quite as easy to read as with the Heikin-Ashi. Having said that, Heikin-Ashi candles don't actually give you, the way they're calculated, the true price. So in bull charts, what we can do is we can turn off the Heikin-Ashi candles and we can keep the real candles. So you might, let's put that back again. You might have a look at it and say, oh yeah, that's it. What's actually my price? Because it'll be slightly different to the Heikin-Ashi because it calculates on an average price, and there is, hiding underneath your Heikin-Ashi is your real price. But again, it's not something you have to use, but just pointing out that you can use both on bull charts, and it does make it much easier to read. Okay, and the point of all of this was, do we really need all those indicators when we can get the same information from a Heikin-Ashi on a Ichimoku cloud? Okay, and here's an example of a cloud and how it could be used for aggressive short-term trades, intermediate trades, or longer-term investing. So the aggressive buy will be breaking here, the cloud. We've got increasing on-balance volume. We've got increased money flow, so reasonable. That's where an aggressive short-term trader would be. Maybe the swing trader might come in here, or certainly a break of the 200 EMA. That would be an entry point. And the same for the exit. We've got the crossovers here. We've got a close below the standard here. So that's one exit point. We've got a volume down. We've got money flow down. It's a reasonable exit. We've also got, for those that use ATR trailing stops, here's the trailing stop. We've got a break below the trailing stop. That's another exit for the swing trader. And then usually with the investor, a break below the cloud. I've got to get out, which you can see was the good move. From cloud to crossovers, again, we've got a 9-period crossing over at 26, so we've got a possible entry. We've got a possible exit as it crosses below, another entry, another exit, and it's certainly below there. It doesn't go back, it retests it and falls away. So we could have traded it by the cloud, we could have traded it by the crossover. And the fifth component, and I know this is messy, but I wanted to show you in context, is that the delayed. And now the delayed, when it's above the price, as in here, it shows that there's reasonable momentum, and as the momentum weakens, here, you'll notice that the delayed starts to enter the price area. When the delayed drops below the price, you'll find that the trend weakens and it often reverses when that happens. As here, remembering that this is 26 places behind the actual price here. So in this case, 26th of May, here, we had the first exit opportunity because the delayed has actually broken through here, retested the price area and fallen away. So the aggressive trader could have got out here. And then we've got longer term, we've got a break of the cloud running up against this support. And again, it's bouncing off this support. I haven't looked at today's chart for Cochlear to see how it went. We can have a look at it. Here it is here. So we've broken the cloud and come down. And again, I used bull chart's 26 bars to go back from this price where it broke to see where the delayed was, and it was an extra confirmation of what was happening. So you could trade this by the break of the cloud, by the crossover, and you could just use those two. A lot do, but as extra confirmation, you could use the delayed as well. That's a third factor saying we got to get out. We got to get out. So it just strengthens your. The more things in the direction of where it's headed, the more chance, the more probability that that's what's going to happen. Again, this is with other indicators on there to show that when the same things happen, you've got confirmation with your other indicators, and it's really, do you need all these signals to give you the same information? Multi-time frame. Here's an example where I've got, and this is a workspace where I've got a weekly chart on the bottom. I've got a weekly Ichimoku chart on the bottom. I've got the daily one up the top. And this was just for someone like myself that works all week. This is a lot of us work off weekly charts, and then we use the daily chart for entry and exit signals. So in this one, we've got a weekly chart there, and just to show you that around about the start of February, we'd broken above the line, the turning line and the conversion line. We're heading for some major resistance here, and then we actually break the cloud on the weekly. And if we go up here, we see the same thing. We've broken the chart here, we come up, we retest it, and you'll notice that when this was beating about here, was in this area here. So the entry, the good entry, was actually here, and if we go back 26 bars, the delayed is above the price, so we've got some extra strength. We've broken the cloud on the weekly, we've broken the 200 EMA as well, we've bounced off support, so we've got plenty of things in our favour. Bouncing off support, delayed above the cloud, and also the 200 EMA. So here's our entry point. We keep going, and again, exit, just to show you the different exit possibilities. We've got the delayed coming into the price area, retesting and dropping away. So we've got one exit here. We've got the second one here where it closes below span A, which is an area of support. We've got a third one when it breaks the ATR trailing stop, and we've got a fourth one when it breaks here. So investors, traders, and that's Ichimoku being used as a multi-time frame, even though a daily chart also includes multi-time. So just in summary, we can determine the trend, we can determine support and resistance, momentum, we can use it as a quick screening tool, and I'll give you a demo of that. We can use entry-exit points, can be used on all different forms of trading, multi-time frames, can be used as a standalone system, or if you've got your own system, make a template, put it over, and just use it as confirmation that what you think is happening is actually happening, and there's not some big area of resistance above you. Just want to give one more example of that, and that's Domino's Pizza at the moment. Domino's Pizza, and I'll just get rid of the lines. And here's Domino's on a weekly, and you'll see it broke here, it came on, it retested and went down. And you're thinking somewhere in here, this looks all right, a lot of green things. Have a look at the daily, and this is what happened. Yep, we retested it. It looked like it was going to be good, but because there was this huge cloud of resistance, we wait to see if it's going to break it, and obviously it didn't. And you can see that Domino's is still trending down. So just because we look at something on a weekly chart and it might look as though it's coming good, when we go to the daily, it wasn't really working and looking as good as what you think it did. Okay, so just in summing up, hopefully I've convinced you that it's worth having a look at, and because we're getting a lot of AI in trading now, the volatility is increasing. Trades are done in flash, and most of us aren't watching our screens every second of the day. So just another tool for you to have a look at, and maybe you can put it in your trading. And to give you context, the reason I looked at it is because some gurus I saw, and I work on a system of 1R, which is risk, 2R, 1.5, and some people did some back testing on this with beginners, and it showed that using their standard buy and entry signals with the cloud, they got between a 50 and 60% success rate with a 2 risk, which if you've seen some other systems, that's pretty damn impressive for a chart for beginners to be able to get results on. So, which is why I looked into it. And that's all I've got for you. If it made sense, and willing to take questions if you've got them.
Paul, thank you. Thank you. As you said, if you look at an Ichimoku chart, it can look daunting, complicated. There's a lot of material on there. And I think you've managed to successfully break it down into key elements for us and walk us through them. So that's really good.
Robert, maybe I could just comment.
Yes, Ali.
Paul, thanks very much for the presentation. I'm absolutely delighted because you mentioned in your presentation the 2 things that I really love, and that's Ichimoku and Heikin-Ashi. As Robert knows, I did a presentation to this group on Heikin-Ashi a year or so ago, maybe longer now. And I make a lot of use of that, but I've also spent a lot of time studying Ichimoku as well. And I really do find it particularly useful, and I really enjoyed your presentation tonight. So thank you very much on that. And I would certainly support your comments for people to have a closer look at it. It does look a bit daunting. There are also some quite good books on Ichimoku as well. I don't know whether you've chased some of these. I've come across quite a number, and probably the best one that I think there is a book called Trading with Ichimoku by Karen. I'm not quite sure how she pronounces the name, but it looks like Pelole, P-E-L-O-I-L-L-E.
Yeah, that is correct. Yep.
It's a wonderful book, and I first I first got involved or got interested in Ichimoku when I think David Linton spoke out here at a conference in an ATAA conference in Sydney, which was probably back in, I don't know, Robert, you might remember better. I would have guessed it was probably 2007, 2008. Might have been a bit earlier than that, actually. So, yeah, and he of course, wrote quite a reasonable book on, what do you call it, cloud charts. But I don't think it was as good as the first book I mentioned. So, yeah, there's plenty of good material out there if people want to spend a little bit of time trying to understand it. I think it does take just a little bit of time to get your head around it. But once you do, you do find it becomes fairly easy to follow. And I think it is one of those charts that once you've got used to it, I mean, it's supposed to be what they call it at a glance, so that you can tell exactly what's happening just by having one look at the chart without having to, you know, let's say, look at all the detail. And
that's what I've got on the screen at the moment. I was just going to run through that later. this is my bull charts Ichimoku template, and just on the side here I've got some of the blue chips, and here it is. We're just looking at scrolling through, except I've got my IntelliCharts on and some of the lines from others are on, but here's just scrolling through the top stocks, and at a glance you can see downtrend, 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 uptrend, uptrend. You know, it's very quick to scroll through. Downtrend, hitting resistance. It's very quickly easy to scroll through if you set up a template like this to look at the charts and saying, well, I'm not going to look at any that are looking like this. Here's one that's interesting. Where did it bounce off? Major support level. Is it going to keep going, Flight Center? We don't know. But interesting. That was the weekly chart, by the way. These are all weekly charts because I look at it weekly first. So yeah, setting up this is what Ichimoku is. First glance, you look at it, you can tell it's in an uptrend and there's strong momentum. Maybe I should be looking at it as something to trade.
Yeah. I think, Paul, your idea of turning off some of the elements, I think is a good one as well, because I think sometimes when all the elements are there, it sort of does make it a little bit more confusing, whereas you can make your selection fairly well on what you were just showing a moment ago, and then if you want to go into it in a bit more detail, you can turn on the other elements and analyse it a bit more closely.
This is where I started. I just started with the cloud and nothing else, and many years ago. But that's where I started. Same thing. I turned off some of the elements so I could see what was happening, and then I started adding elements as I got interested in a stock, like this one. There's a support there. It's a weekly. We'll have a look at the daily and then see how it goes. Hugging that lower end of the cloud. Obviously, I'd wait for a bit of a break in the cloud. One other thing that I did fail to mention is that unlike other systems, the Ichimoku tries to predict the future by spanning ahead 26 periods. So in this case, you can look down and see, okay, it's headed down, but looks like in the future it thinks that it's going to increase. So we might see if it bounces off this support, because in the future it looks like it has a bit of a dip and then it's headed back up. Whether it does that, maybe, maybe not, but it's the only system I know that tries to predict the future as well.
Yeah, no, very good. Thanks, Paul. Really great.
Appreciate it.
Alec, thanks for all of that. And in case anyone missed it, one of the things that both Paul and Alec just mentioned was the ability to use the layer manager in bull charts to turn off some of the elements and maybe end up with just the cloud and the price, the candles, and then to save that as a bull charts template and add it to your template toolbar. And that makes it so much easier to simply apply a simple chart like what we're looking at now, apply that 20 stock just by clicking on the template toolbar button for the Ichimoku that you might have added to your template toolbar across the bottom there.
So here's an example of a complicated one that I did up for someone. And instead of looking at that, you could just click on your template and look at that.
Yeah, very good tip, that one. Paul, if someone didn't want to eyeball a whole lot of charts looking for trading opportunities and wanted to write a scan, just off the top of your head, or you might have already done this, we could, I guess, scan for stocks where the price is above some aspect of the Ichimoku cloud. Have you got some tips along those lines?
Yeah, at the moment, I think there's a bug in bull charts. Because it gets a bit confused with the spans. I've tried it many times, and sometimes it'll work, but in theory, you would want the price above span B and preferably span A above span B. And I've tried to do that with volume greater than 200,000, and sometimes it gets it, sometimes it doesn't. So I'm not sure if there's a bug in the way they're calculating it, but I've tried it on the last version and this version, and I've had problems with it on both. So I'll play with it a bit more, but I just haven't had a chance to chat to Brendan and say, hey, look, we've got a problem here. But as I said, I've tried it multiple times, and if someone's able to do it, as I said, I find it just as easy to. And this is another tip. If you've got an exploration that you use that's worked in the past, you can still use that, but when you get your example here, just overlay this with it so you can see what's going on. Everyone's talking about corporate travel management at the moment. You know, its weekly doesn't look so great, even though its daily doesn't look much better now. Yeah. So, if they'd come up on another scan, say this is the scan on my right-hand side, you can always use this as an overlay. And there's Macquarie Bank. Again, not looking too good. Qantas was another one that had a fly up, and it's now not looking so good. Price of fuel's gone up again. South 32 is in a downtrend. So it's very easy to go through this list quickly and see what's happening with things. Seek, everyone's talking about Seek. Well, I wouldn't be buying it at the moment.
No.
Woodside had a good Woodside in the cloud. We'll wait till we see what's going on there. I think Xero is another one. Hope people made heaps of money on Xero. Have a look at that. See how weak the cloud is? That means that there's not much resistance there. And as soon as it took off, it's away from the cloud, so there's plenty of momentum. This area here, if I bring my little chart down, you'll see that that's a big area of support. Bounced off that, and it's gone right from about $70 to over $100. And even on the weekly, it was a good indication. Here we are breaking the cloud, and you can see what it did when it took off. So just a tip, it isn't as strong as it was. It's starting to weaken, but it's still pretty good.
Yep.
What was the other one? Woolworths, I think, was another one.
Yep.
Having a go too. So that's there's 20 or 30 stocks I've just gone through in about a minute. So very easy to visualize as a template.
Yep. Paul, I'm also thinking, looking at all of the price charts you're sharing, I'm thinking that for someone who wants to play with Ichimoku and get started with it, it looks as though a relatively simple way to do it is to focus on the cloud and whether the price is above or below the cloud.
That's exactly where I started.
Okay.
It gives you a good indication. Is it a strong trend? We only want to be trading when there's a strong trend. If it's a weak trend, let's look for something that's better.
Okay. All right. Any other questions anywhere?
About the pink and the green, because I normally assume pink, red, downtrend, green, uptrend, and that's not actually the case here, is it? All it means is the span A has crossed the B and vice versa.
Yeah, in general, it's look at the thickness of the cloud. The thicker the cloud, the more support and resistance. There's the resistance there. And the thicker the cloud, if the price is here, it's got to get above that before it goes. It's a big area. Whereas here, a little area, and you saw on that chart that I had of here, again, little area breaks through the cloud relatively easily, whereas this big thick one, it bounces around off support, well, in resistance this case. So
the pink and the green are sort of irrelevant in a way.
Not really, because it's still a downtrend, and we're looking at whether the price is above or below it. So if I just go back to that one, if the price is down here, doesn't matter whether it's green or red, if the price is below the cloud, it's in a downtrend. It's only in an uptrend, and it can be an uptrend above here, so long as it's above the cloud. The difference between the colors is the weaker, the red cloud has got the weaker on the bottom and the stronger on the top, so resistance at the top, whereas the green cloud, the weaker resistance is at the top and the stronger support at the bottom.
The other thing with that is, I mean, even without the price on that chart, you've got a pretty good idea of what's happening just looking at the green and red clouds.
Absolutely.
As Paul said earlier, with Ichimoku, it also tries to tell you what's going to happen into the future. So if you see that green cloud rising and going further up, it's really an indication. I know sometimes the price can close back through the cloud, but generally it gives you a pretty good idea that you're in an uptrend just looking at that, the shape of the clouds themselves. So I think looking at the red and green clouds is very relevant.
And just on that, that's why I tried to differentiate between a trader and an investor. A trader might take their profit 1R, 2R, 3 times the risk on the way up, but an investor would obviously wait until they would stay in the trade longer until it saw it starting to break the cloud. So it, as I said, the cloud and into the future gives the investor a better chance. The trader, he's going to be out at somewhere in here. He's not going to last that long. Yeah.
Thank you.
Very good.
Yeah, so don't really worry about the color. It's more whether the price is below or above the cloud. Because some of you go onto the internet and read some of the books and they say never trade when it breaks the red cloud, wait until it gets above the green. But there's plenty of cases where the red cloud is horizontal, and when it breaks there, you can get 30, 50% before it comes above the green cloud. So that's why I use the delayed. The delayed will tell you whether there's enough momentum to keep you going. The delayed is above the price, then chances are it's going to keep going. But yeah, there's just as many systems for using the cloud as what there is for anything else. Some will say you never buy until the price is above this green cloud. Some will say forget the delayed. Some will say only use the crossover. Some will say it's got to be above the cloud, it's got to be above the crossover, and the delayed's got to be there. So it just depends on your area of trading. Obviously, the more conservative you are, the more pieces you want to be in together. And a very conservative investor would be, they want to be above the cloud, they want to be above the crossover, and they want the delayed there. Whereas an aggressive trader would break the cloud and just possibly a crossover as well. Just to show you that you can use it for other things.
Oh. So what are we looking at there, Paul? Bitcoin.
That's Bitcoin, to show you can do it other things.
Above the cloud. But tell us, right at the right-hand end of the chart, that even though Bitcoin is climbing and it's above the cloud, the red cloud is falling. What's that tell us?
Momentum. Momentum is weakening.
Oh.
If we have a look at the
So it's flagging a possible fall in price.
Yeah, so if we look at the weekly, you see that cloud is pretty big.
Yep.
And just above where it is now, we've got a major resistance level that goes back a long way. And that's just forewarning you. If I was trading Bitcoin, which I'm not at the moment, you'll see that there's also a previous high here as well. And if I saw that, see how the Heikin-Ashi candles are getting smaller and smaller?
Yep.
That is a sign. When you get a change, you see Heikin-Ashi candles always get smaller and smaller when there's consolidation and a possible trend change. So if these get smaller, you'll find they probably bend over like that.
Alec told us that. And I should mention Alec's recording of the Heikin-Ashi is in YouTube.
Yep, and that's why, because on a weekly chart, we're actually in no man's land. So we haven't broken above this chart. If we break above here, then you'll be looking to get into Bitcoin, because in the future it looks like it's going to climb again. But as I said, there's your resistance. You really want to break that 31,057 mark before it's going anywhere.
Very good.
Which is a bit above where we are. And here's the US stocks. Where's Apple? You can see Apple's on a bender. But you can see that although the price has dropped the last couple of days, the Heikin-Ashi candles are still in an uptrend, but weakening. And the weekly chart on that shows here was your break, say 3rd of April. And April, here we go, there's where we broke here. We would have got in there and you could have ridden Apple from 130,000 bucks there. Yeah. Another one to keep an eye on is Adobe. Adobe's a break here. You'll see it's retested where the spans are close. There's not a lot of support and resistance, but it is a major one. It's a flat spot. It bounced off there and it broke this high and just took off.
Have a look at NVIDIA.
NVIDIA, it's very similar. I think I've got
NVDA, I think.
Yeah, I don't know if it's going to come up. Oh yeah, here we go. There's NVIDIA. Again, look at that big flat spot on the cloud. So major support, and broke this one as well and just took off. The weekly shows the same thing. But the only problem with that is it's so parabolic that I'm expecting a bit of a, and you'll see here it's weakened today. Weakened, there it is there. So, and as I said, if it starts coming over towards this cloud, might be an idea to get back into that one. Yep.
Good.
Yeah, they're not traveling so good.
No.
This is just using the cloud and seeing that. Which one would you buy?
None.
None.
Macquarie.
I think that's it. Macquarie's not doing that great either. It's in the,
It's in the
no
cloud.
man's land.
Paul, thank you very much.